afternoon, everyone. We'll start in some time, waiting for a few people to join in. So, yesterday we've discussed in a few basics. Today, we'll start with the second unit, which is about incorporation of company and matters related to incorporation. So, this is also a basic chapter, however, a bit more detailed than the yesterday's session. Meanwhile, if you have any doubts in whatever we've discussed yesterday, you may ask. All of you all may ask a doubt if you have any in whatever we've discussed in yesterday's session. Okay, let me start with today's session. So today we are going to start with chapter 2, which is about incorporation of companies and all the matters related to incorporation. So, can someone tell me what are the two most important documents which are filed for the purpose of incorporation of the company? What are the two most important documents which are filed for the purpose of incorporation of a company?
Memorandum of Association and Articles of Association.
Right, Memorandum of Association and Articles of Association. So these are the two most important documents which are filed for the purpose of incorporation of company. Now, when we talk about incorporation of company, the first thing which is required for the purpose of incorporation of company is that there has to be an idea, right? If you want to start up a company, if you want to set up a company, you should have a business idea. If you do not have any business idea, then how are you going to even start a company, and what business are you going to run? Because the main intention behind starting up a company is that you have to carry out a lawful business by setting up a company. So there has to be some idea when you are starting a company. Now, the person who conceives this idea for the formation of company and who conceives this business idea, that person is referred to as a promoter. Section 2, Clause 69 of the Companies Act 2013 defines the term promoter, and it says that a promoter is a person who is named as a promoter in the Memorandum of Association of the company, whose name is written as a promoter. So we give details of different people. So if we have specifically mentioned a person's name as a promoter of the company, that person will be referred to as the promoter. Or according to whose instructions the board of directors of the company work. or he is a person who directly or indirectly controls the management of the company. So if any of the three criteria are satisfied, then we say that the person is the promoter of the company. So when we talk about incorporation, what is incorporation? So incorporation is basically the process by which the company is registered and it is brought into existence. So when we talk of incorporation, what is it? It is the process by which the company is registered. Now, for the purpose of incorporation, you should first have a business idea. Only then incorporation will make sense, right? If you do not have any business idea, what company are you going to establish? So, for that, the promoter comes into picture. So, who is a promoter? Promoter means a person who is named as a promoter in the prospectus or who is identified as by the company in its annual return, who has the control over the affairs of the company directly or indirectly, whether as a shareholder or as a director or otherwise. So he's a person who has got control over the affairs of the company, or in accordance with whose advice, directions, or instructions the board of directors of the company are accustomed to act. So, just like we have discussed, he is a person according to whose instructions the board of directors of the company are working. So that person is referred to as a promoter. Now, say for example, there's a chartered accountant and he gives some advice to the board of directors of the company. Will that chartered accountant become a promoter of the company? Will you call him a promoter?
No, madam.
He is giving advice in his professional capacity. So you will not call the chartered accountant a promoter of a company. So if a person is acting in his professional capacity, in that situation, we do not refer to that person as a promoter of the company. Okay. So please be very careful. There could be a question containing that a CA is advising the board of directors. The board of directors are working as per the advice of the chartered accountant. So, will the chartered accountant become a promoter? So, the answer is definitely no. The chartered accountant will not become a promoter because he is working in his professional capacity. So, when someone is working in the professional capacity, then in that situation, they will not be regarded as promoter of the company. Clear? So, have you all understood the meaning of the term promoter?
Yes, madam.
Yes. Moving on to formation of company. And for that, there's section 3, which lists down the basic requirements for the purpose of formation of company. And according to section 3, the basic requirement is the minimum number of members. Now, for a public company, the minimum number of members is 7. For private company, it is 2. And for one person company, it is 1. So before you start a company, the first step was you should get an idea. You should have an idea of what business you're going to run. Now, after you've gotten an idea, you should also have people who work with you. So you'll have to bring in members who work for your company, who work with you in the company. So the second requirement is for the purpose of formation of the company is that there should be the minimum number of members. So if it is a public company, minimum is 7, private minimum 2, OPC, there's only one person in that company. And company can be formed for any lawful purpose. So it is very important that the business which you are carrying on by establishing a company should be a lawful business. And for a company to be formed, minimum 7 members are required in case of public company, 2 in case of private, and 1 in case of OPC. And their names shall be written in the memorandum of association of the company. So, what is a one person company? One person company is a company which has only one person as its member. Now, this concept of one person company was brought in from Companies Act 2013. It was not a concept earlier, it was a new concept which was brought in. And the main intention behind bringing in the concept of one person company was to promote entrepreneurship amongst people and also to help people start a company, enjoy the benefits of a corporate organization, even if they are starting a business alone. So that's the reason why the concept of one person company was brought in. Now, There are different types of companies based on liability. On the basis of liability, companies are divided into three types. One is a company limited by shares. The other is a company limited by guarantee. And the last one is an unlimited company. So, what is a company limited by shares? So, a company limited by shares is a company in which the liability of the members of the company is limited to the extent of unpaid value on share. Now, say for example, the value of share is 100 rupees, and on that, rupees 70 is paid up. So the remaining 30 is the unpaid value, and the shareholders' liability is only restricted to the extent of rupees 30. His liability is limited to the extent of only unpaid value on the share. He will not be called upon to pay anything over and above this 30 rupees. So what happens in case of a company limited by shares? In case of a company limited by shares, the liability of members is limited to the extent of unpaid value on the share. Talking about a company limited by guarantee. So, in case of a company limited by guarantee, what generally happens is it is a company where the liability is limited. It is limited here as well. However, it is limited here to the extent of agreed amount of contribution. So what happens is in certain situations, the shareholders they agree to pay certain amount which is called as contribution, and this amount they'll pay at the time of winding up of the company. So in case of a company limited by shares, if the company wants to call up this 30 rupees, the company can call up this 30 rupees at any point of time. It can be during the existence of the company or at the time when the company is being wound up. But when we talk about a company limited by guarantee, the agreed amount of contribution which a shareholder agrees to contribute can be called up only at the time of winding up of the company and not before that. So, in both the situations, the liability is limited. However, the extent to which the liability is limited is different in both the cases. In case of a company limited by shares, the liability is limited to the unpaid value on share, and in case of a company limited by guarantee, the liability is limited to the agreed amount of contribution, whatever amount the shareholder has agreed. Talking about an unlimited company. So, an unlimited company is a company where the liability is unlimited. So, as the name itself suggests, it is a company where the liability of members is unlimited, and at the time of winding up of the company, the member may be asked to contribute towards the assets of the company in order to pay off all the liabilities of the company. So, that type of company is a is an unlimited company. So, did you understand what is a company limited by shares, company limited by guarantee, and an unlimited company? Is it clear, everyone?
Clear, madam.
I hope it is clear.
Yes, madam.
Yes. Moving ahead, now, there is section 3A. Section 3A says what would be the penalty if the minimum members criteria is not met. So, under section 3, we have understood that there should be minimum 7 members in case of a public company, 2 members in case of a private company, and 1 member in case of OPC. Now, in case the number of member goes below 7 in case of public company or goes below 2 in case of a private company, what will happen and what are the consequences of it? So in any situation, if the number of member goes below these two limits in case of public company or a private company, then the companies will have to take corrective actions within 6 months. So they have 6 months of time wherein they can appoint new members for the number of members who have reduced. And In a situation where a company fails to appoint the new members while the number of members is also reduced, in that situation, what will happen? Every person who knows that the company is running without satisfying the limit of minimum number of members, that person who is aware of this fact, he will be severally liable for payment of all the debts of the company which have been contracted during the time after that 6 months and can be sued. Let's understand this with help of an example. Now, say for example, on 1st April 24, the number of members in say A Limited has gone to 5. What is the minimum requirement in case of a public company? What is the minimum requirement in case of a public company?
7 members, madam.
7 is the minimum requirement. So here they'll have to add up 2 more members. What is the time they have? They have 6 months of time. Now 6 months from here go to 30th of September. Okay. So until 30th of September, can they have the time to appoint 2 more members in this company. Now, say suppose there are 5 members in the company, and say the name of the 5 members are A, B, C, D, and E. These are 5 members. Out of these 5 members, say B and D do not know about 2 members being not being there in the company. A, C, and E are aware that the number of members is reduced and they should appoint another 2 more members in the company. Now, what happens is 6 months have passed by and the company continues running its business, and it is going on running its business. So, what does Section 3A say? Section 3A says that in a situation where the company runs its business for a time span more than 6 months with the reduced number of members, then in that situation, all the people who are aware of this fact that the company is running with less than the minimum number of members, those people, those members will become severally liable. Severally means individually liable. They'll become individually liable for what? For all the debts of the company which have been contracted during this time. After 6 months, whatever transactions are being done, whatever debts have been contracted by the company, for those debts, these people who were aware, who had the cognizance of the fact that the company is running with members below the actual requirement, then in that situation, those people, what will they have to do? Those people, they'll become individually liable for the debts of the company contracted after this time span of 6 months. Is this clear? Have you understood this? And they
Yes,
can also
madam.
put in their own name. Why is this being done? This is a punishment for them for not uh, appointing new members in the company and running the company in spite of knowing that the number of members is not meeting the criteria. Moving ahead, the next important point, which we are going to discuss now, is about the Memorandum of Association of Company. Can someone tell me what is a Memorandum of Association?
Memorandum of association means rules and regulations to be followed by the company for the incorporation and other matters.
Okay. And what are the different clauses of memorandum?
Name clause, objects clause.
Right. So there are different clauses in the Memorandum of Association. Now, if we talk about the Memorandum of Association, this is the most important document when we talk of with respect to a company. Memorandum is one of the most important document which is made with respect to a company. And it is also called as the foundation or charter of the company. It is the base with which the company has been formed, and it has different clauses such as the name clause, situation clause, capital clause, Then there's subscription clause, object clause. There are different clauses in the memorandum of association. Now, what are the objects of registering the memorandum of association? The first thing is it helps in identifying what is the possible scope of operations of the company. Meaning, what are the powers and scope of the company? What are the things which the company can do? And what are the things which are within the powers of the company? You will get to know about it if you read the Memorandum of Association of the company. Then it also enables all the stakeholders to know what its powers are and what activities it engages in. So it helps the people, it helps the shareholders to know what are the powers of the company, and also helps the people in understanding what are the activities in which the company will engage itself. So, what are the powers of the company, as well as knowing that what are the activities it can engage in. Uh, People who want to join on Zoom, the link is same, I guess, right?
Right, madam. The
Yeah,
same link. Yesterday,
the
same.
link is same. The link has not changed.
I think all are joining in YouTube. I think all are
Yeah,
joined in YouTube.
yeah. So people who have joined Zoom yesterday, the link is the same. You all can join using the same link even for today. Okay. Moving on. Every person entering into a contract with company is presumed to have knowledge of the conditions contained in the memorandum. So say if you are investing in any company, or if you are entering into any contract with any company, it will be assumed that you have read the memorandum and you have understood what is mentioned in the memorandum. See, if you want to invest in any company, don't you do a background research of the company? You'll definitely do it. So that's the reason why it is always assumed that if a person is entering into any contract with the company, the person has read the memorandum and has understood the content of the memorandum of association of the company. Apart from it, shareholders understand the purposes for which the money can be used by the company and the risk he is taking by making such investment. So, since the memorandum contains the object clause, which states the objective with which the company has been incorporated, it helps the shareholders of the company to know, okay, fine, if I'm investing money in this company, my money is going to go here. The company is going to use my money for this particular purpose. So the shareholders of the company will know the purpose for which the money which they are giving to the company will be used, and he can also assess the level of risk which is involved when he reads the memorandum. So a company cannot go beyond what is stated in the memorandum. Any act ultra vires the memorandum is null and void. Any act which is ultra vires the memorandum, it is null and void. There's a very famous case law associated with this. Can someone tell me the name of case law? You have studied it at foundation level.
Yeah, Ashbury versus Ashbury
Yeah, Ashbury.
versus Railway.
Okay, it is Ashbury Railway Carriage and Steel Company Limited versus Rich was the name of the case law, which says that any act which is ultra vires means beyond the powers. Any act which is beyond the powers, beyond the scope of the memorandum of association, it is null and void, and it has no validity at all. So even if a company wants to do something other than what has been stated in the memorandum of association, the company cannot do any such thing. The company cannot go against the provisions of memorandum. Whatever has been stated in the memorandum, company has to follow it. Moving ahead, talking about the contents of memorandum. Memorandum of the company, it contains the name clause. So name clause, it contains the name of the company. Now, when we talk about the name of the company, there are different rules and regulations related to the name of the company. The name of the company should not be very identical to name of any other company which is in existence. It should not contain any inappropriate words. It should not give a indication that it is associated with the government of India. It cannot contain the word national. But if it wants to use the word national, permission from central government has to be obtained. It cannot contain the word bank unless and until it is involved in any banking business. So, what are the rules related to the name of company? It should not be offensive, should not be identical to name of any other company, should not be similar to name of any other company which is already in existence, should not contain any undesirable words. It should not give an indication that it is associated with government in any way. So there cannot be any term in your company which gives an indication, okay, fine, that this company might be a government company, because that misleads the people. And also, it cannot contain the word national unless and until permission from the central government has been obtained. Also, if the company wants to use the word bank in its name, it has to be a banking company. Otherwise, it cannot use the word bank. And the name of a public company should end with the word limited, and name of private company should end with the word private limited. So this is one requirement which has to be satisfied. Now there are different rules which are related to the name of the company. So the names of the company should not resemble very closely name of any other company which is in existence. It should not contain any undesirable terms. And there are certain terms which can be used in the name of the company, but for that prior permission or prior approval of the central government would be required. Now, talking about reservation of name. So, say if you want to incorporate a company, but there's still time, but you have gotten a good name in your mind and you do not want anyone else to take up that name. So, what option you have is you have an option to reserve the name of your company. So, this name reservation application can be filed in two situations. One is when a new company is to be incorporated. Second is when an existing company wants to change its name. So, name reservation can be done by a company in two situations. One is in case of a new company being incorporated. Second is in case of change in name of an already existing company. Now, for that, what has to be done? So, for reservation of name of the company, form has to be filed with the registrar of company. The registrar of company will then reserve the name. So, a unique form has to be filed. The form which is filed nowadays is Spice Plus, or there's another form which is run, which is Reserve Unique Name. So these forms can be filed with the ROC, making an application for the purpose of reserving a particular name for the company. And if you, what do you think? Will the name be reserved forever? If you file an application for reservation, will the name be reserved forever? Is my voice very less? Am I audible?
Yes, madam, you are audible. I think it is having some time period, 1 year or 2 year. We have to renewal for 2 or 3 years, right?
1 year or 2 year? Do you think the name will be reserved for such a long time? Do you think the registrar will reserve the name for such a long time?
Yeah, I don't know,
The,
madam.
the name reservation will be done if you are incorporating a new company, then the name will be reserved for 20 days. And you will have to incorporate the company within 20 days.
Okay.
If you can. If you're not able to incorporate, then you will again have to reserve the name and then incorporate the company. And if it is for change in name of an existing company, then the name will be reserved for 60 days. Okay, so if it is a new company, the name will be reserved for 20 days. And if it is for change in name of an existing company, the name will be reserved for a time span of 60 days. So application for reservation of name, either for a proposed company or the company which wants to change its name, can be made to registrar in a prescribed form along with fees. So when you're making an application, there has to be some fees accompanied with the application as well. And what is the application, in which form the application is made? It is Spice Plus, accompanied by fees to the registrar for reservation of name set out in the application as proposed company. You can also resubmit the form in case there's any defect in the form within 15 days of application, if there are any defects in the form. Or apart from it, you can also make an application using the reserve unique name web service along with some fees. What are the rules? Upon receipt of application, registrar may reserve the name of company for a period of 20 days from the date of approval. And in case of application for change in name of existing company, the reservation will be done for 60 days from the date of approval.
Reserve the name means what, madam?
Reserve the name means just like you reserve a seat in a train. That seat is reserved for you. So now,
So,
when you
okay.
reserve a name for a company, it basically means no one else can use this name for their company now.
So, within that 20 days, register confirms that you
The
use this
registrar
name.
confirms the name, gives you the right to use the name, and you now have 20 days to incorporate the company.
Okay.
Now, what happens is, in certain situations, after the reservation of name, it may be found that the application which was furnished was wrong, or say incorrect information was given in the application. Now, what will be done in that kind of situation? Now, there could be two situations. One is the company has already been incorporated. The second is the company has not been incorporated. So, if after the reservation of name, it is found that the application which was made for the purpose of reservation was giving some wrong or incorrect information, then if the company has not been incorporated, then the name reservation is cancelled, and the person who made the application, because there were mistakes, it was a wrong application, he shall be liable to a penalty which may extend to 1 lakh rupees. So this is when the company has not been incorporated. But say if the company has been incorporated, then what will be done? Then in that situation, the company will be given a direction to change its name within a period of 3 months by passing an ordinary resolution. So company will be asked to change its name within 3 months by passing an ordinary resolution. There'll be striking off of the name of the company from the registrar of companies, and also a petition for winding up the company. So this will happen in a situation wherein wrong particulars were submitted for the purpose of reserving name. So, what will happen if any wrong or incorrect information is given? Two situations may exist. One is company not incorporated. Second is company is incorporated. Company already incorporated. If the company has not been incorporated, in that situation, the reservation will be cancelled. Reserved name is cancelled, and the person who has done it will be penalized. There's a penalty prescribed which may extend to 1 lakh rupees. But say if the company has already been incorporated on the basis of the wrong application which was made and the name was reserved, then in that situation, the company will be instructed to change its name. And for the purpose of changing name, company will be given 3 months. So company will be directed to change its name, and for the purpose of changing the name, the company will be given 3 months to change its name by passing an ordinary resolution. By passing an ordinary resolution, company will be asked to change its name or the name of the company will be striked off from the register of company, or a petition of winding up will be filed. Now, say even if within those 3 months the company fails to change the name, then the registrar itself will allot a new name to that company. So this is what will be done if a company, if it is found that a wrong application or wrong details or incorrect information was furnished for the purpose of reservation of name. So all of this is related to the name of the company. Have you all understood this?
Yes, madam.
Any question, any doubt here in this particular point?
No, madam. After completion of this topic, we will solve case studies, right?
Yes.
Yeah, okay, madam.
Now, moving on to the next and the most important clause of the Memorandum of Association, which is the object clause. So, object clause is the clause which contains all the essential matters, the scope, the power, the objective with which the company has been established. So, see, whenever a company is being established, there's some purpose for which the company is being established. Now, where will this purpose be written? So, all of the purpose will be mentioned in the object clause of the Memorandum of Association, which makes the object clause one of the most important clauses of the Memorandum of Association. So, what does the object clause contain? It contains the matters, it contains the purpose for which the company has been incorporated. So some specified IFSC public company and IFSC private company, they shall state objects to do financial services as permitted under the SEZ Act and any other matter considered necessary in furtherance thereof, in accordance with the license to operate from IFSC located in an approved multi-service SEZ. So IFSC, they are special type of company, and these are company which are located in those international financial service centers which are approved by the multi-service SEZ. Now, talking about the object clause, the company cannot do anything beyond the object clause. If the company does any act which is beyond the object, it is null and void. Talking about liability clause, so the liability clause discloses details about the liability of members of the company, whether it is limited. If it is limited, then whether it is limited by shares or whether it is limited by guarantee, it is clearly stated. Then comes in the capital clause. So capital clause, what does it contains? In case of a company limited by shares, it contains the amount of the share capital. It contains the authorized share capital of the company. What is the authorized share capital? What is the authorized share capital?
Authorized share capital.
What is authorized share capital?
Authorized share capital means which is mentioned in the capital clause of the company, right?
Yeah, but what is it?
Exactly, I don't know, madam.
You must be knowing this. You must have studied this in accounts as well. Authorized share capital. No. So authorized share capital is the maximum amount which the company can raise by way of issuing its shares. It is the maximum amount which can be raised by the company. If say if the authorized share capital of the company is 1 crore, the company can raise only 1 crore of share capital. Company's share capital cannot go beyond 1 crore. So authorized share capital is the maximum amount which can be raised by the company, maximum amount of capital of the company. And the capital clause mentions the authorized share capital. It is also called as nominal capital. It also states that into what number of shares, how many number of shares the authorized share is divided, and what is the value of each share. Then it also states the number of shares which the subscribers to the memorandum they have agreed to subscribe, and each person who is subscribing to the memorandum, that is who is signing that memorandum of association, he shall subscribe to at least one share each. The number of shares each subscriber to the memorandum takes is indicated opposite his name. And in case of a one-person company, this clause covers the name of the person who in the event of death of the subscriber will become the member of the company. So in case of one-person company, this is called as the nomination clause. In case of OPC, this is called as a nomination clause. Then comes in another clause, which is the situation clause or domicile clause. So it contains the name of the state where the registered office of the company is situated. Now, say if the state is, uh, if the place where the registered office is situated is, say, Hyderabad. So the state would be Telangana. So situation clause, it contains the name of the state where the registered office of the company will be situated. And then comes the subscription and association clause. So it contains the name of all the people who are subscribing to the memorandum of association, and it contains the signatures of those people, and also contains the number of shares which they have subscribed to in the memorandum, which is indicated besides their name. And the subscribers shall sign make their signature in the presence of at least one witness. So there shall be a witness present in whose presence the subscribers to the memorandum are signing the memorandum. Clear? Understood this? Are you
Understood,
all
madam.
clear with this clause? Subscription, all the clauses of memorandum of association, are they clear?
Yeah, clear, madam.
Okay. So let's now move ahead with the articles of association of the company. So what are the articles of association of the company?
I think both memorandum and articles are similar, right?
No. What are the articles of association of the company? Anyone? So, Articles of Association Memorandum is the basic document which defines the powers of the company, the scope of the company. But when we
Legal
talk
rights
about the
and
Articles of Association of company, these contains the bylaws and rules and regulations for the internal management of the company. So, it is the law. These are the rules and regulations in accordance with which the company has to work. So, the management of the company will work. So, articles of association, what do they contain? They contain the rules and regulations for the internal management of the company. However, company may also include such additional matters in its articles of association as are considered necessary by the management. If the management considers that there are a few points which shall be addressed by the articles of association, then those points shall also be considered and stated in the articles of association of the company. Now, there's one very important provision which is entered into the Articles of Association, and that is called as an entrenchment provision. Now, what is an entrenchment provision? So, it is a provision in the Articles of Association which makes certain changes, which make certain amendments either more difficult or impossible to do. Entrenchment basically means making something more difficult. So, entrenchment means making something more difficult. Including an entrenchment provision in the Articles of Association, how does it help? When an entrenchment provision is included in the Articles of Association of a company, it basically makes it difficult for the people to make any changes in, say, the object laws or, say, somewhere else, any other amendment, making that will become nearly impossible or will become very difficult. Now, say, in order to take a loan, say, if the entrenchment provision contains that in order to take a loan, or more than 10 lakhs, the company will have to obtain approval of at least 90% of the shareholders. So generally what happens is we pass an ordinary resolution and the thing is done. But when some specific point like this is mentioned, then the specific point will also have to be followed, whatever is the specific point. So in these kinds of situations, the entrenchment provision plays a very important role. The main reason why entrenchment provisions are included is to protect the interest of minority shareholders. The main intention behind including an entrenchment provision is to protect the minority shareholders in a company. So how does an entrenchment provision help? Entrenchment provision, it basically makes it difficult for making amendments or uh, impossible to make any amendments in the provisions or in any clauses of the memorandum. Now, at what time can you include the entrenchment provision? Either at the time of formation of the company, you can add an entrenchment provision in the articles of association, or you can amend the articles, amend as in alter the articles of association, and later on add in the entrenchment provision to it. But if you want to add the entrenchment provision later on, then specific approval would be required. In case of a private company, approval from all the members will be required if any entrenchment provision has to be included. And in case of public company, a special resolution would be required. So, in case of a private company, all the members of the company will have to agree to the change which is being made. However, in case of public company, you can just pass a special resolution and an entrenchment provision can
Madam,
be
what
added
is
in.
the difference between agreed to by all the members of the company or and special resolution, madam?
All the members means 100% members shall agree. And special resolution means 75% majority.
Okay, madam.
Okay. So if it is a public company, special resolution will do. But in case of private company, all the members of the company will have to agree.
Okay, madam.
Now, as and when an entrenchment provision is included, information about this has to be given to the registrar by giving a notice. The company will have to give a notice to the registrar informing him about inclusion of such entrenchment provision. Understood?
Understood, madam.
They can either give it in the Spice Plus form or in case of any existing companies, if the change is being made, then they'll have to file form MGT 14, and this form has to be filed within 30 days from the date of entrenchment of articles. So if it is an already existing company, then the form which has to be filed is form MGT 14, and within 30 days from the date of entrenchment of the articles, the information has to be given to the registrar. The registrar shall be informed about it. Understood? Have you all understood what are articles of association and what is the memorandum of association?
Understood, madam.
Yes. Now
Yes, madam.
moving on to one very important doctrine, which is the doctrine of ultrawires. Now, when we talk about the doctrine of ultrawires, the word ultrawires basically means beyond the scope or beyond the powers. This doctrine of ultrawires basically says that if any act of the company is beyond the scope of memorandum, beyond the scope of memorandum, then that act of the company would be null and void and will have no validity at all. Now, when we talk about the doctrine of ultrawires, there's a very famous case law which comes up, and that is Ashbury Railway Carriage and Steel Company Limited versus Rich. Now, can someone tell me what happened in this case law, provided that you've studied this at your foundation level? So, I presume that you must be knowing what the case law talks about.
Yeah, I forgot, madam.
Or what? Is there anyone else who remembers the case law? Okay, fine. So, what happened here in the case law was So there was this company, Ashbury Railway Carriage and Steel Company. Now, this company was into laying of railway lines and providing materials for the purpose of railway lines and doing general contractors' work for the purpose of laying down of railway lines. Now, this person, Mr. Rich, his company gets a contract to lay down a railway line in Belgium. So, his company has gotten this contract. Now, for the purpose of fulfillment of this contract, Rich needs a lot of capital, lot of money. So, Mr. Rich, he approaches Ashbury Railway Carriage and Steel Company Limited. So, Mr. Rich, what he does is he approaches this company. Now, when Mr. Rich approaches this company, he approaches this company for the purpose of finance, not for raw material or not for helping with laying down of railway lines. Mr. Rich has uh, approached this company for the purpose of finance, that you provide me capital for the work which I'm going to do, that is laying down of railway line. Now, this company Ashbury, it agrees to provide money to Mr. Rich. However, Ashbury's object clause never mentioned that Ashbury is capable of providing financing facilities. So later on, when Mr. Rich demands for money, this company, Ashbury Company, it says no, it denies paying the money to Mr. Rich. Now, Mr. Rich, he says, on the basis of the contract, I have now incurred expenses, but I need money for the contract which I have received. So you will have to provide finance to me. However, Ashbury Company, it says that no, we cannot do so because this act is beyond the scope of our memorandum and it has no validity at all. So we are not going to do it. So now in the given situation, who do you think is correct? Is Mr. Rich correct or is the Ashbury Company correct? Who is right?
Ashbury company, correct.
So this company is right in the given situation. Reason being very simple. The company has done an act, the contract which they have entered into is for providing finance. And nowhere in the object clause of Ashbury Company the term financing has been mentioned. Yes, it mentions the word general contractors, but these general contracting work cannot include financing or providing finance to a person at all. So this ways, the Mr. Rich, he does file a suit against the company. However, the courts, they give their decision in favor of Ashbury and say that the contract which was made between the company and Mr. Rich was null and void. It did not have any validity at all. So if anyone is doing any act which is beyond the powers of the memorandum, it is null and void and does not have any validity at all. Is this clear? You can give this a little reading. Done. So when we talk of doctrine of ultravirus, any act which is done by the company which is against the memorandum of association of the company, it is void and cannot be ratified also. So cannot be ratified meaning all the shareholders, even if they give their approval for that particular contract, the contract cannot be made valid. Okay. So if any act done against the memorandum of association, it shall be void. However, if there's any act which is done beyond the articles or done against the articles of the company, then in that situation, the contract may be voidable. That is, there's a possibility of ratification to be done by the shareholders in the general meeting. And any act which is otherwise the directors only, meaning if there's any act which is done by the directors which is beyond their powers, then in that situation, the shareholders again have the right to ratify it. If the shareholders they ratify it, then well and good, no problem. If the shareholders do not ratify it, then that contract will be void. Is this clear? Have you all understood till now?
Yes, madam.
Moving ahead to the other doctrine is the doctrine of constructive notice. Now, when we talk about the doctrine of constructive notice, what happens here is just like we have understood that any person who is entering into a contract with a company is presumed to have knowledge of the contents of memorandum of association of the company. That is what is stated in the doctrine of constructive notice. So constructive notice says that any person who is entering into any transaction with a company, we assume that he has read the memorandum and he knows about what is stated in the articles of association and memorandum of association of that company. So that is the doctrine of constructive notice. However, you may know what are the objects or what is the scope and power of the company, but you do not know how the internal management of the company is working. And for that came in an exception to this doctrine of constructive notice in the form of the doctrine of indoor management, or this is also called as the Turquoise rule. This is also called as Turquoise rule. Turquoise rule, why so? Because of the case Royal British Bank versus Turquoise. Okay. So now what does this doctrine of indoor management talk about? Basically says that we can assume that a person knows about the memorandum of association and articles of association of a company because these are public documents. However, how will a person know about the internal problems or internal management of the company? How will the person know how the things are happening in the company internally? So this is the doctrine which protects the external people from the company and helps people in taking the advantage of this particular doctrine and protects them from the doctrine of constructive notice as well, because the doctrine of constructive notice was very harsh. A person may know what is stated in the memorandum, but how will he know how the internal management of the company is working? So for that, this exception had come in the form of Turquoise rule or the doctrine of indoor management, which basically says that a person who is dealing with company cannot be assumed to have the knowledge of internal problems of the company. The person will not know what are the internal problems of the company. And this doctrine helps to protect external members from the company and state that the people are entitled to presume that the internal proceedings are as per documents submitted with the registrar of company. So this doctrine helps to protect the external members from the company and also the internal problems are known. Now this doctrine that came into force from this case law, Royal British Bank versus Turquoise. So just like I've told you, directors of a company were authorized by the articles to borrow on bonds. Now what happened in this case law? The company issued bonds and however, later on at the time of liquidation, the payment for those bonds was not done, and the company was liable on the bond as the the Royal British Bank. It was liable to receive the amount. The reason being very simple. How will they know how the internal management of the company is working? How will they know if a proper resolution was passed or not? Whether the people who passed the resolution, did they have the authority to pass the resolution or not? So this is all what happened in the given situation of Royal British Bank versus Turquoise. So there was one doctrine, doctrine of constructive notice, which had one exception, which is doctrine of indoor management. Now doctrine of indoor management has got three exceptions. What are they? One is if a person has the knowledge of irregularity. If a person knows, say you are an outsider, you go to the company and the company wants to sell a machine. Now say the cashier of that company, he is showing the machine to you and he is entering into a transaction for sale with you. Now do you think a cashier will have the authority to enter into such a big transaction? Do you think he can do so?
No, madam.
He cannot. So when you have the knowledge of the irregularity, within the company, then in that situation, you cannot say, okay, fine, indoor management, come protect me. That cannot be done. The second situation is negligence. So, if you are being negligent, that a cashier is entering into a transaction with you and you are being negligent about it, then in that situation, you cannot take the benefit of doctrine of indoor management. And in case of forgery, if any document of the company turns out to be forged, then the doctrine of indoor management will not apply in that situation. So, three exceptions to the doctrine of indoor management. One is where you know about the irregularity, but you still go ahead with the transaction. Second situation is where a person is being negligent. And the third situation is in case there's any forged document of the company which is given. Then in that situation, we say that the doctrine of indoor management will not apply in this situation. Is this clear? Have you all understood until here? Please give this last exception a reading.
Okay, madam.
And if you have any doubt, you can ask me. Done? Is it done?
Yeah, done, madam.
Okay, so let's move ahead. Let's do one thing. I have a question. Okay, fine. We'll finish this topic and then we'll take a look at the questions. Okay. Now coming to section 6. What does section 6 say? Section 6 says that the act will override the memorandum of association and articles of association. So what does it say? The provisions of this act shall have effect notwithstanding anything to the contrary contained in the memorandum of association of the company or agreement executed by it or any resolution passed by the company in general meeting, whether the same be registered, executed, or passed as the case may be before or after the commencement of this act, and any provisions contained in the memorandum, articles, agreement, or resolution shall, to the extent to which it is repugnant means it is conflicting with whatever has been stated in the act, then the provisions to the provisions of this act become or be void as the case may be. So basically, it basically says that Companies Act will prevail over the Memorandum of Association and Articles of Association. You cannot write anything conflicting with the Companies Act in your Memorandum of Association or Articles of Association or any agreement which you are entering into it. If you have written anything in your Memorandum of Association or Articles of Association or any agreement which you have made in, which is conflicting with what has been stated in the Act, then in that situation, that particular provision which you have mentioned in your memorandum will become void. The provisions of Act will prevail. So the Act will always override the Memorandum of Association and Articles of Association. You cannot go beyond the Companies Act. Okay, so that is what Section 6 talks about.
Madam, override means beyond, right?
Override means over Act will prevail over Memorandum of Association and Articles of Association.
Okay.
Now, what will be the effect of MOA and AOA? Section 10 talks about the effects of registration of MOA and AOA, and it says the MOA and AOA, they shall bind the company. So MOA and AOA, they shall bind the company and the members of the company. And all the money which are payable by any member of the company under MOA or AOA shall be debt due from him to the company. So if any amount is payable, then that will be referred to as a debt due from that member to the company. So based on MOA, AOA, company is liable to members, members are liable to company, and apart from it, normally members are not liable to each other. Hence, a company can recover calls in arrears from a member as forcefully as it is recovering a loan. So, if a member is not paying calls on the shares, the company has got a complete right to recover those amounts which the member is not paying. Now, moving ahead with one very important concept, and that is the incorporation of company. So, for a company to come into existence, the company to come into existence and carry out its business, it is very important that the company is incorporated. Because if the company is not incorporated, then how is the company going to run? So section 7, it provides the procedure which is followed for the purpose of incorporation of company. So the first thing is reservation of name. So if you have any name in mind, it is always advisable that you reserve the name for the company, whichever name you like, you reserve that name for your company. Now, for the purpose of reservation of name, you can use the form run, that is reserve unique name, which is available at the MCA website. So, like I mentioned yesterday, all the company related forms, you can find them on the MCA website. So, you can file this form, pay prescribed fees for the purpose of reserving the name. Now, when you make an application to the registrar will first go through the name which you have given. And if the registrar think that he can allow you, he can permit you to use this name, the registrar will accept the application. But if the registrar finds the name undesirable, the registrar has the authority to reject the application as well. So when you make an application, it may either be approved or rejected by the registrar, and after allowing resubmission of such application within 15 days for rectification of defect. So the registrar will definitely allow you to resubmit the application and you'll be given 15 days for it. However, it is up to the registrar. He may either approve the application or he may reject the application. Now, after the application is say approved, you have the application approved. Now you have 20 days to register your company. Let's assume that we are incorporating a new company. So you have 20 days to register your company now after the registrar has approved the application. So now what will we do? We will draft the memorandum and sign the memorandum, articles of association. Everything will be done. So drafting of memorandum, it will contain all the 6 clauses. What are the details which shall be mentioned in all the clauses of memorandum. So proper drafting of memorandum of association and articles of association of the company will be done. And after that, these documents, they'll be e-filed and e-stamped. So all these documents are electronically filed. Nowadays, there's no physical documentation which is done. We file all of these documents electronically with the registrar. Okay, so all of these documents are e-filed and e-stamped. Consent of persons nominated as directors to act as directors to be submitted electronically. So the people whom you are appointing as directors in a company, now say there's a company ABC Limited which is being formed. Mr. A and Mr. B are the directors, being are the people who are being appointed as directors in the company. So a written consent of this director shall be obtained that they are willing to be appointed as director in the company. So consent means approval, their confirmation that they are agreeing to act as directors of the company shall be obtained and also shall be submitted electronically. Then a declaration that we have complied with all the statutory requirements, we have complied with the rules and regulations given by the Companies Act shall be made. So this declaration is mandatory. So there are two declarations which are given. One is for compliance with the provisions of the act. So second is stating that there was no conviction held before. So statutory declarations which are mandatory, they shall be submitted. After that, there is payment of fees which is done, and the stamp duty is paid electronically. And then, after submitting all the documents with the registrar, after filing the documents with the registrar, do you think the registrar will immediately grant the approval or immediately grant you the certificate of incorporation? Will it immediately happen?
No, madam.
It will not immediately happen. After you file all these documents with the registrar will scrutinize all the documents, he will check all the documents, and if he's satisfied that all the information which you have given is correct and he does not want to scrutinize it any further, at that point of time, the registrar will incorporate the company. But if the registrar is not satisfied, two things can be done. One, he may ask you to submit more details, more documents, or he will reject your application. So, two things which the registrar can do. He can either ask you to submit more documents, or he will reject the application for registration or incorporation of company. But if the registrar is satisfied, he will give you the certificate of incorporation. So, certificate of incorporation is just like a birth certificate of a company. He'll give you a certificate of incorporation which is digitally signed by him. So, the registrar shall, on the basis of documents and information filed, register all documents and information in the register and issue a certificate of incorporation to the effect that the proposed company is incorporated under this act. So, when the registrar is satisfied with all the documentation which is provided to him, the registrar will issue a certificate of incorporation for the company. And as and when the registrar issues this certificate of incorporation, he allots a unique number to the company which is called as SIN, which is company identification number or corporate identification number. Just like you have a unique Aadhaar number, similarly, this is for companies. The unique identification number for the company is referred to as SIN, the full form of which is company identification number or corporate identification number. So, a unique SIN will be allotted, and this will also be mentioned in the certificate of incorporation of the company. Now, on and from the date mentioned in the certificate of incorporation. So, the certificate of incorporation will also contain the date. Now, this is nothing but the date of incorporation of the company, or you can call this as the birth date of the company, the day on which the company has been formed. That is the date from which the company will come into existence. So, from the date mentioned in certificate of incorporation, the registrar will allot the company a corporate identity number, which shall be distinct identity for the company and which shall be included in the certificate of incorporation. So it will be also be stated here in the certificate of incorporation. So SIN is a 21 digit alphanumeric based unique identification number comprising data sections elements that reveals the basic aspects about the company. So SIN is a 21 digit alphanumeric number. So they have given you the examples of SIN. However, one unique feature of SIN is if the SIN starts with L, it means it is a listed company. If it starts with U, it means it is an unlisted company. So if it is a listed company, the SIN will start with L. And if it starts with U, it means the company is an unlisted company. This is for you to identify that what type of company is it. So here's the uh, thing you have for the purpose of SIN. It is a 21 digit number, and what are the different things which each character reveals. Not very important from examination perspective. This is only for your information. Now, apart from all of this, the company will also have to file declaration about the registered office, because registered office is the place where all the communications will be sent. All the communications of the company, all the communications with the company will be done at the registered office. So, for the registration of the company, the following documents and information are to be filed with registrar within whose jurisdiction the registrar office of the company is situated. What are those documents? MOA, AOA signed by all the subscribers, declaration that all the requirements have under and the rules they have been followed. This declaration is made by whom? This declaration is made by a person who is engaged in the formation of company. Now, say if you want to incorporate a company, you will not do it all alone. You will need help of an expert. It could either be a chartered accountant, company secretary, cost accountant, or an advocate. So this person, he has to give this declaration that we have complied with all the rules and regulations as mentioned in the Companies Act, along with the person who is named in the articles as director, manager, or secretary of the company. So these two people, they give this one declaration. This is declaration number one. Declaration number two is from each of the subscribers to the memorandum and from the first directors of the company. What are they stating in the declaration? Like I've told you that this is a non-conviction declaration. So they should state that they have not been convicted of any offense in connection with promotion, formation, or management of the company. That we have not been convicted, we have not been found guilty of any offense which is related to promotion, formation, or management of the company, or has not been found guilty of any fraud or misfeasance or breach of duty during the last 5 years. So, last 5 years, may the person should not have been found guilty of any fraud or misfeasance. This is for last 5 years. And all the documents which have been, and the third thing which has to be mentioned in the declaration is that all the documents which have been filed, they contain correct information, complete information, true to the best of the knowledge. So two declaration, one is given by the professional and the director or manager or secretary. Second declaration is given by the subscribers as well as the first directors, where they state that they have not been convicted of any offense, not found guilty of any fraud for the past 5 years. And uh, the third thing which is stated in this declaration is that all the documents for the purpose of registration of the company have been duly filed in, and all the information which is given in the documents is correct and complete and true. So these are the declarations which are given. Apart from it, what other information is applied? So it is address for the correspondence. Until the registered office is actually established, you will have to give an address as to whether communication shall be sent to the company. So for that, address has to be mentioned. The particulars, that is name, residential address, nationality of every subscriber to the memorandum along with their ID proof. Particulars of directors of the company. So it should also contain DIN. DIN is director's identification number. And apart from it, particulars of interests of persons who are mentioned they in the articles of association as first directors in any other firms or body corporates, along with their consent to act as directors. So if these people, they have any stake in any other firm, they are a partner in any other partnership firm, or have stake in any other company, they'll have to disclose all of it. So that is called as interest in any other body corporate or any other firms. So that is, obtaining that information is very important. Now, there's form INC 8 is prescribed form for declaration of compliance by professional and director, manager, or secretary. This is the form for declaration. INC 9 is again for the second declaration. Following particulars of every subscriber shall be filled. What particulars? Name, recent photograph, father's name, mother's name, nationality proof, date and place of birth, education, qualification. Then you will have to give the permanent account number, that is PAN, email ID, phone number shall be given. Permanent residential address and also the present address shall be mentioned. Residential proof given, proof of identity given. If the subscriber is already a director or promoter of company, the particulars relating to the name of the company in corporate identity number, whether interested as director or promoter. So if a person is already a director of promoter, the particulars relating to any of the company corporate identification number, whether interested as a director or promoter. Whether subscriber to the memorandum is a body corporate. So any person can be the subscriber to the memorandum. It can also be a body corporate. Body corporate means what? It includes a company, it includes a foreign company and also LLPs. Then following particulars shall be filed with the registrar. So if a body corporate is a subscriber to the memorandum, so what are the particulars which shall be filed with the registrar? One is the name of the body corporate and SIN of the company or the registration number of the body corporate, if any, GLN, if any, the registered office address or principal place of business. What is the registered office address or principal place of business? It shall be mentioned. Email ID. If the body corporate is a company, then a board's resolution that authorizes it to subscribe to the memorandum. And apart from it, if the body corporate is a limited liability partnership or a partnership form, then a copy wherein copy of resolution which says that all the partners they have agreed to authorize they have agreed to authorize the partnership to become the subscriber to the memorandum. And if it is a foreign body corporate, then details regarding the copy of certificate of incorporation of the foreign body corporate shall be given and the registered office. So these are all the forms and details which shall be filed in, and the application which we make with the registrar for the purpose of incorporation of the company is made in the form SPICE Plus. Earlier it was SPICE. The full form of SPICE is Simplified Proforma for Incorporating Company Electronically. So SPICE Plus INC 32 is the form which we file for the purpose of incorporation of the company. And Spice Plus is an integrated web form. It is a web form. You'll have to fill it online, offering 10 services by 3 central government ministries and department. One is Ministry of Corporate Affairs. Second is Ministry of Labor and Department of Revenue in the Ministry of Finance. So thereby saving many procedures, time and cost of starting a business in India. So Spice Plus is initiative towards ease of doing business. Students may, okay, so Spice Plus is basically for the purpose of ease of doing business. Now this signed memorandum and article of association, what are the details mentioned in MOA and AOA? You all know it. So EMOA is in form INC 33 and EAOA is in form INC 34. They shall be signed by whom? By all the subscribers to the memorandum of the company. The MOA shall be signed. And here are the details which shall be mentioned in the memorandum. So you all can just have a look at this. We've already understood it, but let's just quickly go through this. So it says each subscriber shall add his name, address, description, and occupation, if any, in the presence of at least one witness who shall attest the signature shall sign and add his name, address, occupation, if any. Where the subscriber is illiterate, he can affix his thumb impression. So thumb impression will also do if the subscriber is illiterate. Uh, or mark which shall be described as such by the person writing for him, who shall place the name of the subscriber against or below the mark and authenticate by his own signature. And he shall also write against the name of the subscriber the number of shares taken by him. So we do not only write the name of the subscribers, but we also mention the number of shares which are taken by each of the subscribers. The type, written or printed particulars of subscribers and witnesses shall be allowed as if it is written, as long as append signature thumb impression. When the subscriber is a body corporate, then the memorandum shall be signed by whom? The director, officer, or employee who is been authorized. So if it is a body corporate, the body corporate cannot sign. There is some authorized personnel on behalf of the body corporate who will sign the memorandum of association. And where the subscriber is LLP, it shall be signed by partners who is authorized by the LLP to carry ahead this work. Now, persons so authorized shall not at the same time be subscriber to the memorandum or articles of association. So, whoever is authorized, he shall not be the subscriber or to the memorandum or the articles of association of the company. Now, moving ahead, where the subscriber is a foreign national who is residing outside India, His signatures and address on the memorandum and articles of association and proof of identity shall be notarized by the notary. So if it is a foreign national, then his ID proof shall be notarized by notary. Further, if such person residing in India, in a country outside the Commonwealth or to which India is not a party, then the certificate of notary shall be authenticated by the diplomatic or consular officer. So no, if a foreign national becomes a subscriber, then the proof of identity shall be notarized, is what you'll have to remember. By subscriber to memorandum is foreign national residing outside India and visited in India and intended to incorporate a company. In such case, the incorporation will be allowed only if they have a valid business visa. If they do not have a business visa, they cannot go ahead with the incorporation of company. Then, as per Rule 12, in any case, the objects of company requires registration or approval from sectoral regulators such as RBI and SEBI. So, for the purpose of registration of company, approval from RBI and SEBI are required. If they are required, then such registration or approval shall be obtained by the proposed company before pursuing the objects and declaration in the behalf, which shall be submitted at the stage of incorporation. So if a company is into banking business, if you're starting a company which is into banking business, approval from RBI will be required. In certain situations, SEBI's approval will be required. So all of those approvals shall be obtained before the company goes ahead with the process of incorporation. And all the documents which are submitted by the company at the time of incorporation shall be maintained with the company, and it shall be maintained where at the registered office of the company. So company shall maintain and preserve at its registered office copies of all the documents and information which is filed with the company till the dissolution of the company. So all the documents of the company shall be preserved until the company is actually dissolved. Are you all clear with this information? So it basically contained details of all the documents.
Yes, madam.
However, all what is important for you all from examination perspective is the basic process. Is the basic process clear?
Yeah,
Yes.
clear, madam.
Now, what will happen if you furnish any false or incorrect information for the purpose of incorporation of a company? Any idea? If you furnished false or incorrect information for the purpose of incorporation of a company, then in that situation, the person who furnishes this false or incorrect information shall be held liable for fraud and will be taken action against under section 447. So remember, wherever under the Companies Act you see punishment for fraud, section 447 will automatically trigger. So punishment for fraud has been prescribed under section 447 of the Companies Act, and it is a very harsh punishment which has been prescribed. So here also, if a person has given any false or incorrect information or has tried hiding any material information, then in that situation he will be liable for action for fraud under section 447. Now say the person he furnished false information, and as a result of that false information the company has already been registered. Then in that situation, what will happen if the company has already been incorporated? All the people, the promoters, the first directors, the people who made declaration, they'll be held liable for fraud, punished under section 447. That is okay. But what will happen with the company now? So this case will now go to the tribunal. Now, when the case goes to the tribunal, what will the tribunal do? The tribunal will pass orders as it thinks fit, and will order the management of the company to make changes to the memorandum of association or the articles of association of the company. Or it may pass directions that the liability of members will now become unlimited. Why so? Because they furnished false information. I'm sorry. They furnished false information. So the tribunal may pass in directions that now the liability of members will become unlimited because false information was given. Apart from it, They can also direct removal of name of the company from the register of company. They may say now the company will have to remove its name from the register of company. It can no longer work with this name. Or they may pass winding up orders or any other orders which the tribunal will think fit. Tribunal will pass such orders. This is in a situation wherein any false or incorrect information was given for the purpose of winding up of the company. But before making any order, the tribunal will give the person an opportunity of being heard. So an opportunity of being heard shall be given to the people before the tribunal makes any decision. So that is what happens if any false or incorrect information is given for the purpose of registering the company. Now, as in when the company gets registered, what will be the effect of registration of a company? So, from the date of incorporation, the subscribers to the memorandum and all other persons who may from time to time become members of the company shall be a body corporate by the name contained in the memorandum. The company will be the body corporate by the name which is contained in the memorandum. It will be capable of exercising all the functions of an incorporated company. It will have perpetual succession with power to acquire, hold, dispose of property. It will have power to enter into contract. It will also have power to sue and be sued in its own name. So these are the consequences of what? These are the consequences of registration of the company. Now, talking about commencement of business, from when can the company start commencing the business? Now, uh, only obtaining certificate of incorporation is not sufficient. The company also has to obtain one more certificate that is called as certificate of commencement of business, which is also called as the trading certificate. So, what does section 10A subsection 1 say? Declaration to be filed before commencement of business. So, a company incorporated after the commencement of the company's ordinance 2019 and having share capital shall not commence any business or exercise any borrowing power unless a declaration is filed by director within 180 days from the date of incorporation of the company that every subscriber to the memorandum has paid the value of the shares agreed to be taken by him on the date of making such declaration. So, within 180 days from the date of incorporation, the director shall give a declaration that every person whose name is entered as the subscriber to the memorandum, he has paid the value on the shares which he had agreed to take. So we have understood that all the subscribers, they'll subscribe to at least one share each. So in this declaration, what is being stated? This declaration is stating that the people who have subscribed to the securities of the company, they have actually agreed, they have actually paid up the value on the shares which they have subscribed to. And the company is filed with registrar a verification of its registered office. So two things must be stated. One is that the subscribers, they have paid the value on the shares, and the second is the company has verified the registered office. They have filed with the registrar a verification for their registered office. This is what shall be stated before the company commences its business. Then there's Rule 23A of the Company Incorporation Rule, which states that declaration under Section 10A by director shall be in prescribed form with fees and shall also be verified by a CACS or CME in practice. If any default is made in complying with these provisions, company is liable to a penalty of 50,000 and every officer in default shall be liable to a penalty of 1,000 for each day during which the default continues and maximum is 1 lakh. So there are separate penalties for the company and the officer and the person who is in default because of whom the fault has happened or whosoever was responsible to do it but did not fulfill his responsibility, that person is said to be an officer in default. So they shall be liable to a penalty of what? Of rupees 1,000 each day for until when the default continues. However, the maximum penalty is rupees 1 lakh. When no declaration has been filed with the registrar under section 10 subsection 1 clause A within 180 days, if there's no declaration filed, then in that situation The registrar has reasonable cause to believe that company is not carrying on any business or operation, he may initiate action for removal of name of the company from the register of company. So if there's no such declaration filed with the registrar, what will the registrar think? The registrar will have solid reasons to believe, he will have reasonable causes to believe that the company is not carrying out any business or operations, and he can take an action of removing the name of company from the register of company. This is what the registrar can do. Now, talking about authentication of documents, proceedings, and contracts. So, who can sign the documents related to the company? They may be signed by KMP. So, yesterday we have understood what a KMP is. Can someone tell me who are KMP? CEO,
CEO, CFO, CIO,
chief, what?
Chief Information Officer. Is there or not?
No.
Okay.
CEO, CFO, the managing director of the company, or any person who has been appointed as a KMP, any person not more than one level below the directors and who has been appointed as a KMP. So who can sign the documents or proceedings which are authentic wherever authentication is required? So the key managerial person, they can sign the documents. Apart from them, an officer or employee of the company who is authorized by the board to sign the documents, they can sign the documents. So here they've given the meaning of KMP again. So CEO, MD, CS, whole-time director, CFO, not more than one level below directors, or any other person who has been prescribed. Prescribed means as prescribed under the rules. Okay, so we'll stop here for today because we've discussed a lot. So we'll stop here for today. And in tomorrow's session, we'll start with section 22 and we'll move ahead with another different thing. So today we have discussed about incorporation of a company, how the incorporation of company happens, and what are the important documents which have to be filed at the time of incorporation of a company. Do you all have any doubts here? Is it clear?
Clear, madam.
Yes. So tomorrow the class starts at 4 p.m. sharp. So make sure that you join the class on time. Okay. So we'll meet tomorrow and we'll start with section 22, and there are more details. We'll go into more topics
Well,
tomorrow.
tomorrow we will discuss about questions, right?
We'll take up questions. Let me first finish a few points and then we'll take up questions.
Yeah, sure, madam.
Thank you.